Hello, my friends. Welcome back to another video on Rebel Trading. I hope you guys are all having a fantastic day. So in today's video, I have a trading strategy on the 1 hour time frame. As always, everything mentioned in this video will be completely free, and the strategy is good for Forex, stocks, crypto, but I will be using the Euro US dollar pair as I am mostly a Forex trader. Also, I should mention I am not a financial advisor. Please conduct your own research for yourself. I would highly encourage you to do back testing on this strategy or any other strategies mentioned in my videos prior to making any investment decisions. So for today's strategy, the very first thing that we're going to do is we're going to click on the Heikin Ashi candles. We're going to make sure we're on the 1 hour time frame, and then we're going to go up to indicators. We're going to go to the EMA and we're going to click on it 3 times. So for the first EMA, we're going to go to settings and we're going to change the length to 10. For the second EMA, we're going to change the length to 30 and we're going to go to style. We're going to make sure that this line is yellow. And then for the third one, we're going to change the length to 200. And for the style, I'm going to make sure that it's white, and I'm also going to make the line thicker since it's the most significant one on here. So at this point, your chart should look similar to how it is right now. All right, now for the trading strategy. So what we're going to look for here is, first of all, we need to see if the trend is bearish or bullish. So if the price action is above the white line, we can see that there is a bullish uptrend. So the price action should be increasing. And we can see that the price action typically will be hugging the 10 EMA, the blue line. And what we're going to look for is for a pullback. So for example, we can see that the price action pulled back just around here, closer to the 30 EMA. Also, something to watch out for in this strategy is if you see a candle with long wicks, I would encourage you to stay away from that trade, since that means that the asset is highly volatile and the odds of you losing a trade are much higher. So what we'll be looking for is for the price action to pull back closer to the golden line, the 30 EMA. And after the candle is closed, or the bearish candle is closed, we can see that it's an uptrend. We're going to enter the trade. By the way, if you guys haven't already, I would greatly appreciate it if you would click on the like button and comment down below for anything you'd like to see in future videos. I'm trying to get to 1,000 subscribers here on YouTube, and as soon as I do, I'll be releasing my free Telegram channel where I will show all of my trades that I've been getting into. All right, so now for the strategy. On this one, we would be entering the price action right here. So we'd take a long trade. As for the stop loss, typically I put my stop loss a few points below the swing low. So the swing low will be the wick that sticks out the most, right here. The first profit I will take is at the 1 risk reward ratio. I take usually around half of the trade at the 1 risk reward ratio. Then I will continue to take profit on the way up to the 2 risk reward ratio. At this point, I move my stop loss up so that if the trade goes south, I can avoid losing money. So as for when I completely exit the trade, what I will be looking for is a bearish candle. So for example, you can see this one right here. It kind of looks like a bearish candle. A bearish candle is when the wick, it is a red candle. The wick is not above the top of the candle, but there's a wick below it. So I think one of these two technically would be considered a bearish candle. At that point, you would exit the trade. And if you're using a healthy amount of leverage, you can see that you can get a pretty decent, like 5% gain on that potential trade. So for the next trade right here, we can see that the price action did pull back below the blue line. We saw a red candle close. It wasn't as volatile. After the candle close, take the trade. We're going to move our stop loss up to the swing low, a few points down. If the stop loss is too close, you could do it to the second most regional swing low. Again, a few points below to prevent yourself from getting stopped out. As you can see, the price action was quite strong in this day, and if you would have let the trade open until the exit, that would have been a massively profitable trade with over a 6 risk reward ratio. So as for a tip, if you guys would like to receive alerts on this, what you could do is you can set an alert for the 30 EMA, and what you would do is you'd click on once per bar close, and then you would put crossing 30 EMA. So whenever it crosses the 30 EMA or it touches it, you can check the charts and then you can see whether or not the trade will be good. All right, so Now for a short, I would say that the strategy isn't anywhere near as good for a short, but if you would prefer to short with this strategy, it is still profitable. You would wait for the price action to be below the white line, the 200 EMA, and you're going to wait for the first red candle to close. After the red candle closes, and you can see as here it is a bearish candle, we'd open a short, and then we'd put the stop loss to the most recent swing low. Again, I take my first profit at the 1 risk reward ratio, and then I will trail it downwards until after that I move my stop loss down and I wait for the first green candle to close. And as you can see here, technically you probably wouldn't have been able to get into this trade since this is highly volatile. I probably wouldn't trade this, but it did follow with several bearish candles, so technically it would have been a good short trade. So open it from right here, stop loss, most recent swing low. And yeah, if you took profit at the 2.0 risk reward ratio, this would have been a perfect trade. And it had a green candle opening as soon as it hit the 2.0 risk reward ratio. So like I said, it is useful for crypto, stocks, Forex. I would use it mostly for Forex. It works for longs and shorts, better for longs most definitely. And I haven't tried it out on any other time frames, mostly just the 1 hour. And that's typically the time frames that I end up trading, especially when it comes to Forex. So again, if you guys found value out of today's video, I'd greatly appreciate if you'd click on the like button. Go ahead and subscribe to the channel if you'd like to see future trading strategies and to help you become more profitable with your day trading journey. Thank you.